Hello and welcome to Gold, Goats, and Guns. My name is Tom Luongo. It's Sunday, August 20th, around 1 o'clock in the afternoon, Eastern Standard Time, Florida. So I want to talk about what's going on in the gold and silver markets. I a little bit about Bitcoin. I promised that to my people who follow me on YouTube Live and Periscope. Get to it Friday night. I apologize. Figured, we could talk about it a little. Read about these. So they're new to the crypto space. They're new, having put this kind of money on the table. So a little hand holding goes away, and I'm more than happy to do it. So let's talk about what happened in silver and gold on Friday, because it's really important what happened. We had a massive move above resistance levels on the European Open on Friday morning. Around 3 a.m., if you look at the chart, if you go and look at the charts, you'll see a big spike up on the European Open at 3 a.m. New York time, which is when Europe opens. And that persisted until New York opened at 8:30, until the COMEX opens at around 8:30. And then no shock, because it was options expiration for stock options on Friday. We had relentless selling once we got to it actually reminded me of years of the gold bull market, where market would trade up during Asian trading, even during European trading, and then the minute we got to New York, the selling would start, and it wouldn't stop until the COMEX closed or even until New York Stock Exchange. This was normal, and I think if you invested in the morning, if you bought gold on the open, the London Open, and sold it on the New York close every day for the entire length of the decade-long gold bull market, you would have lost 70%. That's how biased trading was during the gold bull market. That's how biased the New York trading was against gold. Most of the gains that happened in gold happened on discontinuous days where they couldn't control it, New York, and during Asian trading. So we haven't been seeing that recently. We've actually been seeing more weakness in Asia and strength during New York, and that's probably because the market, the character of the market changed. Shanghai trading now is trying to push the price down because the Chinese are trying to accumulate at the best price they can, and New York is kind of just letting the gold market run. And if there's any manipulation of the price at this point, it's really a function of the euro dollar market, bond market. But at this point, it doesn't even look to me like gold is really on the radar in a kind of classic manipulation set. Saw during the bull market in the early stages of the bear market. We haven't really seen that for the last. For me, I don't even watch gold for the most part during the day, and I'm not weirded out by stuff happening during the New York market because kind of de rigueur. So Friday's action was actually odd because we got one of those moments where we got one of those kind of classic manipulatory moments, and it's pretty obvious that someone was really going to lose a lot of money on Friday, and gold needed to be pushed back down below 1,300. Silver needed to be pushed back down below. That's what we got. We got a close on silver at around 1696. We got a close in gold at 1290, and that's New York aftermarket close. So, the 530 Globex market. I don't know what the actual 4 o'clock close was. COMEX close. It was, as far as I'm concerned, the way I chart the data. So that's what happened in gold and silver. And I'm going to show you a chart. Interesting thing about the silver weekly chart that I just put up on a team that I recommend you look at, because it gives you a nice quantitative and technical sense of what's happening in this. The pushback on both of them destroyed a possible high probability setup for follow through action. The selling was that vicious to push the stock, to push both gold and silver back, to be, from a quantitative trader's perspective, coin flip as to whether or not we're going to get a move higher or lower coming into this. If you're not used to, you don't know how quantitative trading, probabilistic trading works, I can't explain it here to you. And that, this is comparing opens versus highs, the possibility of, and looking at the historical data, over the last 5 years, weekly basis, gold needs to move $15. To move $15, that only happens to the upside. That only happens half the time. It has to move down like $17. That only happens 45%. Pretty much a coin flip to where it is right now. If it had closed at $12.98, we'd have about a 70% of gold breaking previous week high. And breaking highs and lows are what's important. That's what sets up momentum. That's what brings new people in. That's what changes the character of the market. Why it's incredibly important to watch breaks of previous highs and lows. Moving averages don't fucking matter. RSI, all the other shit, none of that crap matters. What matters is what happens when you overwhelm the supply of buyers and the supply of sellers that lined up last week, last month, last quarter, here at those prices. That's what matters. That's what moves markets. All the other stuff is nonsense and not really truly tradable. They may be nice confirmatory signals of other things you're seeing, but they're not tradable signals. Okay. Truthfully. All right. So you may be able to make money trading the 50-day moving average, but sorry, it's a coin flip. All right, so that's what happened in gold and silver this week. And what that has actually set up now is that because we're near the end of the month of August, there's only 9 trading days left. It sets up about a 15% probability that silver can put in 42 cent up moves back-to-back weeks in order to close above the June high and set up a 2-bar reversal in the month. Those of you who know what I'm talking about, that'll make perfect sense. We want to see a reversal signal in silver. We need to move above 1783 before the end of the month to set that up. Otherwise, we might get a weak reversal signal, a 3-bar or even. That's not a reversal. That's just a weak uptrend for September. That said, we do get a move towards 1780. It actually sets up a possibility of a strong short covering rally into September because we're coming into Congress will be back in session to fight with Donald Trump. That ceiling is on the horizon. Budget fight is on the horizon. All this stuff, there's going to be impeachment talk and everything else. That's all pushing the dollar down and pushing them out short term. So, never know. We might get something weird. We also have the German elections in September. So, in late September. So, there's a whole bunch of stuff that can happen in September. The next 9 trading days in silver are going to tell us whether we're going to get it, whether we're going to get a nice breakout to the upside while we piddle and fart around recent low and the post-Brexit high of around $20. That's really where the new bull market is. Anyway, so all of this stuff is positioning for when the new bull market starts. So I want to go to, that's enough about gold. Let's talk about Bitcoin. Transition over to my desktop. I'm going to show you a chart and we'll talk. All right, so let's talk about Bitcoin. I want to look at, I'll show you the weekly chart. Go back to the weekly chart in just a second, but this is investing.com. I've got the setup to look at data from Bitfinex. So that's where the prices, that's where these prices are from. I know different exchanges have different prices, but as long as you keep your analysis data sets consistent, variations between exchanges holds out in the mix. So what's important to take away here is that after this big move up from 3,300 all the way up to 4,500, is that when we've corrected back down, there's been 1, 2, 3, 4, 5, 6 attempts to break Bitcoin down below $4,000, and we did not get a close on any of the previous 6 trading days below 4,000, even though there were 5 attempts to do so, and that's really strong. I'm telling you that the $3,850 to $4,000 range is very strong support. It's uncovering a lot of buying power there. And a couple of days where we trade in this 42, between 38 and 4,200 would actually be really healthy for Bitcoin. It's kind of stabilize here. I know there's a weird thing going on with Bitcoin Cash, and a bunch of rogue miners are going to try and crash Bitcoin billions, but I just don't. We'll see what happens. So I'm not worried about it. I don't see it in the numbers here. What I see is a whole bunch of price manipulation cash as well, but I'm not seeing it here. All right, and then when you look at it and then all of this stuff shows itself up on the weekly chart. When you look at it, you've got this big down hammer kind of candle here, which is never a good sign. This is a bearish candle. That said, also incredibly huge. You look at the actual breadth of these, stunning. And I keep going back to this one, saying this is one of the most singularly impressive bullish bars I've ever seen in my entire life. We get this massive downdraft, we get this huge drop, and then all of a sudden we get this massive engulfing bar that closes 20% higher than the high from this bar that was like 30%. Yeah, we moved 30% within a week. Ridiculous levels of volatility. There's no way to trade that. And any of you who did trade that and traded it successfully, my hat is off to you. I will take off my goat wrangling hat and expose my balding pate. So, and then from there, what we've had is a massive bull run up to, and I'm a little worried that this is getting parabolic. I'm worried that this is coming needs a correction, another correction that will clear out a lot of the price manipulation from the powers that be. Bitcoin is beginning to move into the mainstream, beginning to become an issue, capital flight issue, safe haven asset, significant proportion, especially at these prices. And so is Ethereum, so is Litecoin, the others. That tells me that Empire has to strike back at some point, getting to and what better way to do so than to manipulate the price up to $5,000 or $6,000 and then crash it back to $2,000 after dumb money and retail has moved in at 4,500, above 4,000, and then they lose 50% money and they get scalped. Trust me, they've done it before in Bitcoin. They do it in gold, they do it in silver, they do it in freaking Apple, they do it in everything. Do it again. Do it to ensure that Bitcoin stays out of the minds of the average person. They want Bitcoin stuffed into a small corner of the populace. It's just and that would be one of the tools and weapons that it's not going to work in the long run. It's just something you have to be aware of. So, and then when you look at the monthly chart, it's ridiculous and stunning. It is. How fast, how moving. When markets get this parabolic, markets tend to crash. But I think what's happening here is that we're getting corrections and not, because forces at play, general market are so big, happening in the crypto space, so large and so needed, necessary, that this is simply a matter of capital. It's merely the matter of the birth of a new monetary system, birth of a new way for humans to organize. Blockchain is and anybody who isn't convinced of it at this point is their wagon wheel maker century. Guys who writers. Elmal is they're Luddites. Always left behind. All right, so that's pretty much what I have for this video. I didn't want to go. Okay, so thank you very much. We'll talk soon. And keep your stick on you guys.